100% of his money, Mike, 100% of his money into Boston Scientific, but done it radioactively, and risk how much? What would you say?
Probably only single-digit amounts, only 5 or 6, maybe 7% of the money he initially put in.
Right. So that way, if he was right about Boston Scientific, he'd make a return, certainly. Okay. But if he was wrong, okay, or if, in this case, the options trading guru that pointed in this direction, okay, if the guru was wrong, okay, at least he wouldn't lose too much, right?
That's right.
And that's the deal, okay? I mean, how would you like to, when you have a losing trade, okay, you go in with $100 and you come out with 94. It's like, well, that's all right. It's a lot better than going in with $100 and coming out with 20, coming out with 13.
Mm-hmm.
That's what happened to my poor friend here, okay? Only on a bigger scale. It was tens of thousands of dollars. Poor fella. Well, to be fair, one of my big losing stock picks last year, I wasn't using my Power Options software, Mike, because I wasn't, hooked up with you guys yet. Okay, I hadn't learned what a powerful tool you've got, and so I did everything the way that I normally do with a calculator and a pen, and I made an addition error. Okay, so guess what? I actually lost on one of my trades. Can you believe this? I lost 9%. Man, I couldn't believe it. I was very embarrassed. I mean, it's the most I've ever lost, since learning to trade radioactively. Okay? But normally my losses are single-digit percent, maybe even in tenths of a percent. Okay, now I'm going to claim this, and I can back this up mathematically and experientially. Okay, the quest for the holy grail of trading has been so long and hard because we've been looking in the wrong place. Most folks are looking for it in a foolproof method for picking stocks. And others are looking for it in just a foolproof method for timing their trades, for getting in and out at the right time. But as we've proven, okay, you can actually be right most of the time and still lose money. I think that the folks that would answer no, are they happy with the results over the last 12 months? The folks that answer no, know that you can still lose money even if you're good at picking stocks. Isn't that so?
Yeah, that's absolutely right.
Even if you're good at picking stocks, you can still lose money. You can be right more often than you're wrong and still lose money. On the other hand, you can be wrong most of the time. Most of the time, be wrong and still make money if you have a proper money management system. Okay? Now, having said that, I'm going to ask folks online, what is your system for money management? And the folks that are already trading radioactively, it says that, what was it that, I guess 18% or 19% are beginning to trade radioactively. Is that right, Mike?
Yeah, we had 21% already have the blueprint, and 9% said that radioactive trading. We had 16% trading the RAP methods plus others, the radioactive methods plus others.
Plus others, okay. All right. So you're not going to really be able to participate in this poll because the radioactive method of risk management is not up there. Money management's not up there. So this poll is mainly for the rest of the game, okay? We're doing pretty good so far. Some folks are being real honest and saying, money management? What do you mean by that? What does that mean? I know what that means in my household, but I don't know what that means when it comes to playing the stock market. So I'll explain while those votes are coming in, okay? Money management is practiced by everyone, and either it's a poor strategy or it's a good strategy or somewhere in between. And let me give you an example. Okay, I have children, and because I have children, they're always asking me for things. And very often I will, want to get them something. Daddy, can I have a fill in the blank? So sometimes I will say, yes, you can have a Matchbox car. Okay. No, you may not have a flamethrower. Yes, you can have this, dance lessons. Well, let's see. The answers could be yes or no, but really more often than any of those answers, I give this answer, and I think anybody that's a parent out there can relate. How much? How much? How much is it going to cost? Okay? Because there might be a benefit. There might be a benefit. Hey, I want dance lessons, Daddy. Oh, okay. How much? If it's $1,000 an hour, I don't think Daddy can afford it. On the other hand, if it's $50 a week, well, maybe we can afford that. Okay, so it's kind of important to know what you're getting for what you are putting up. okay? And when it comes to stock investing, you want to know up front how much you can lose, okay? All right, so we had method of money management. Can you see those results up there, Mike?
Yes, Kurt. Yes, Kurt, I can.
Okay, 6% said, what do you mean by that? Well, hopefully now we know that money management is having rules for whether or not we're going to spend money to get into a position, okay? How much is the first thing that we consider when we're getting in? How much can we lose? And then when we're getting out, we're considering, okay, when's the best time to get out? All right, 10% hold till it hurts. I guarantee that this was not that this 10% was not in the 9% that said they were happy with their trading last year. 8% hold till the bitter end. Those guys either. I don't think they were in that group. Okay, 42% use stop orders. Okay, that's marvelous. Stop orders can be good, but they have two problems. We're going to explore those. And then 33% are highly diversified. Okay, well, super. Here's what we want to talk about. We want to talk about if we're going to have the holy grail of trading, okay, what we've got to do is we've got to solve the biggest problem. And the biggest problem that all traders face is this exponential curve here, okay? And what happens is it begins kind of gradual, but then steepens and steepens and steepens until it's like a sheer cliff, okay? What this is the mathematical representation, the graphical representation of a mathematical fact. And that is that when you have a loss, you have a bigger loss than you think you've had, okay? For example, common sense says if I lose 10% in a trade, what do I got to do next?
Well, you got to make 10% back, don't you, to get back to break even?
That's what most folks think, and that's what I thought, okay? And it makes common sense, but it doesn't make mathematical truth, okay? Now, we are going to get to two more income methods, and we're going to do a live trade. Okay, but it's very important to lay this foundation, this groundwork, because this single principle here, more than anything else, is the reason behind many folks' success and many folks' failure. Okay, if I lose 10% of $100,000, why, that's $10,000. How much do I have left to trade, Mike?
$90,000, Kurt.
So I take my $90,000, I put it into another trade, and I make 10%. Now, how much have I made?
Well, you've only made $9,000 because it's off of the $90,000 that you had left to trade.
Yeah. See, I've lost 10%, I've made 10%, and you'd think that I'm even, but I'm actually $1,000 behind. Now it gets worse. If you lose 25%, you don't need to make 25%, you need to make 33. If you lose 33%, you don't need to make 33%, you need to make 50. Okay, think about it. If you lose half of your money, do you have to have a 50% gain?
No.
You got to double your money, which is 100% gain. That's what needs to happen next.
That's right.
Okay? So what's important with any system of trading is concentrating your losses way over on the left side of that exponential curve. That's the key to success. It's actually what I'll call the holy grail of trading. Okay. Now, if you're using stop orders are okay, but there's a problem with stop orders. And that is that a stop order is nothing more or less than a market order. Now, explain a market order, Mike.
Well, a market order is basically just an order where you place with your broker and say, go ahead and fill me at the worst possible price.
It's the bend me over order. Okay,
Yeah,
it's basically saying, look, I'll pay whatever you want, or take this off my hands. You can pay me whatever you want. Okay, it's not the best way to go.
Nope.
Okay, and a market order a stop order is a market order that becomes active the moment that the price is violated. Now, in a highly liquid market, that's okay sometimes. Okay, for example, let's say I bought Daktronics here. After all, it had a dividend. It had a 2-for-1 stock split. Its earnings are up. IBD rated it an A+ on fundamentals and also an A+ in technicals. Okay, so I get in at $30 a share, and I say, you know what? I don't want to lose more than 10%, so I'm going to place a stop order. Well, where would I place that stop order if I got it at $30? Let's say I bought it this day here.
Now, if you put a 10% stop order, that'd be $3 below your price. You'd have a stop order in at about 27.
Okay, so my stop is at 27, and I see it over the next day. It drops a little bit, but it doesn't drop too much, and then it goes up, and it goes up some more. I'm thinking, hey, happy day. And then overnight, we have a gap of 35%, is where it starts the next morning and finishes even lower. Okay, am I likely to lose 10% or am I more